Pinterest just crossed $1 billion in a single quarter. That is a number most social media platforms never reach. But the Gap income statement shows a loss. So what is actually going on here?
Revenue up 17.8% year over year, and free cash flow of $311 million, a 30.9% FCF margin. That combination tells a different story than the headline net loss.
Revenue came in at $1,007.5 million, up 17.8% year over year. GAAP EPS was negative 12 cents, a loss quarter. Operating margin was negative 8%. Free cash flow was $311.7 million, a 30.9% FCF margin.
I want to push back on the framing of this as a weak quarter because of the Gap loss. Pinterest's operating loss is almost entirely driven by stock-based compensation, a non-cash charge that runs through operating income but does not affect free cash flow. The cash business is generating real money. The Gap headline is a presentation artifact, not a liquidity problem.
So the loss is SBC on the income statement, but the cash register is ringing 31% FCF margins. Lana, walk me through the revenue breakdown.
Pinterest generates revenue almost entirely from digital advertising. US and Canada is the highest ARPU market. Average revenue per user there is multiples of international. The growth lever this quarter was international. MAU growing faster outside the US with advertiser demand catching up to that user base. The lower funnel shoppable ads product is expanding CPMs and improving advertiser retention.
The shoppable ads, that is the commerce play they have been building toward.
Pinterest's core thesis as an advertising platform is purchase intent. Users come to Pinterest actively planning home renovation, weddings, wardrobes, travel. That declared intent makes Pinterest inventory more valuable to commerce advertisers than passive scroll platforms. The shoppable ad units that connect directly to product catalogs and transactions are where that intent gets monetized at a premium.
And the FCF explained the gap to the Gap loss.
Pinterest recorded roughly $80 million in operating loss Gap. Free cash flow was positive, $312 million. The bridge is stock-based compensation, a charge that reduces Gap earnings but requires no cash outflow. Add back SBC and Pinterest's cash generation is substantial. Investors who look only at Gap EPS miss the underlying cash economics of the business.
MAU trends, any color there?
Pinterest has been growing monthly active users at a healthy rate, with strength in markets outside the US. The challenge is US monetization. Domestic ARPU is high, but user growth in the US is more mature. International MAU growth is real, but monetizing those users at US-level ARPU requires building advertiser demand in those markets, which is a multi-year process.
The number that reframes this quarter, 30.9% free cash flow margin, while the income statement shows a loss.
The surprise for investors discovering Pinterest through the Gap loss narrative is how strong the underlying cash conversion actually is. A 31% FCF margin on $1 billion quarterly revenue run rate is not a struggling platform. It is a profitable advertising business with an accounting presentation that makes it look like a money loser on Gap.
The billion-dollar quarter is also a structural milestone. Once a platform crosses that threshold, the ad buying conversation changes.
Scale matters in digital advertising because large brand advertisers need platforms that can absorb significant budget allocations. A $1 billion quarterly revenue run rate signals to major agencies and brands that Pinterest can take meaningful spend. That opens new advertiser relationships that were not viable at smaller scale. It is a compounding dynamic. Scale attracts budget, budget drives CPM expansion, which drives revenue per user higher.
And Pinterest's user intent is still uniquely differentiated. Active planners, not passive scrollers.
That declared purchase intent is the moat. Pinterest users are searching for products they plan to buy, not just consuming content. That behavioral signal is worth more per impression to a retailer than attention captured on a passive feed. The platform that can connect intent to transaction most efficiently wins the commerce advertising dollar. And Pinterest's entire product roadmap since 2023 has been building that funnel.
How does Pinterest compare in the social advertising space?
Snap is the closest comparable in scale, Both serve distinct user demographics outside the Facebook ecosystem, and both have been growing advertising revenue in the mid to high teens. Pinterest is growing 17.8% versus Snap's 13.9%. The difference is Pinterest's commerce orientation, which gives it a monetization ceiling that pure social platforms may not have.
And Meta is the elephant, always in the room.
Meta is the comparison that matters most for advertiser budget allocation. Meta's scale means it can offer advertisers reach no one else can. Pinterest's answer is differentiation, not competition for the same dollar. A fashion retailer does not choose between Meta and Pinterest. They run both. Pinterest's goal is to be the default platform for commerce intent, not to replace reach-based advertising on Meta.
The valuation, Pinterest trades at a PS multiple that reflects the path to GAAP profitability, not the FCF reality.
Pinterest trades at roughly 3 times trailing revenue. That multiple is a discount to Meta, but reflects the GAAP profitability uncertainty and the question of whether international ARPU can catch up to domestic levels. If the shoppable commerce monetization accelerates and operating leverage improves, there is a path to multiple expansion. The risk is that the GAAP losses persist longer than the market is willing to fund.
What is operationally working for Pinterest?
3 things are working. Revenue crossed the billion-dollar milestone with 17.8% growth, which keeps Pinterest competitive with the fastest-growing social platforms. FCF margins at 31% demonstrate the advertising model converts revenue to cash efficiently, and the shoppable ad product is showing CPM expansion as lower funnel commerce advertisers pay higher rates for conversion-oriented inventory.
Where is Pinterest exposed?
GAAP profitability is the open question. Stock-based compensation is not going away. It is how Pinterest compensates engineering and product talent in a competitive market. As the SBC burden grows with headcount, the path from FCF profitable to GAAP profitable requires either revenue growth outpacing SBC expansion or deliberate cost management. Neither is guaranteed.
And TikTok and Meta are building commerce features aggressively.
The competition for commerce advertising dollars is intensifying. TikTok Shop and Meta's shoppable Reels are direct competition for the same lower funnel budget Pinterest is targeting. Pinterest's advantage is intent. Users come to the platform actively seeking product inspiration. But if TikTok delivers better conversion rates at lower CPM through algorithm-driven discovery, advertisers will redirect budgets regardless of Pinterest's intent narrative.
We opened with the billion-dollar milestone alongside the GAAP loss. The tension is real. The cash machine is working, but the income statement is telling a different story. That is the Pinterest bottom line.
Watch average revenue per user in Q2, specifically whether international ARPU is closing the gap with domestic and whether shoppable ad CPMs are expanding. Those metrics tell you whether Pinterest's commerce thesis is converting into durable revenue per user growth. For full coverage this week, STRL, Duo, VRTX, and more, subscribe to Charged Alpha.
We will see you on the next one. This episode is for informational and educational purposes only and does not constitute financial advice.
Charged Alpha is not a registered investment advisor. Nothing in this episode should be construed as a recommendation to buy or sell any security. Always conduct your own research and consult a qualified financial professional before making any investment decisions.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.